Sir, very happy evening to all my dear lovable students. I believe that audio, video, everything is clear. Please confirm in the chat box that everything is clear. Yes. What we are going to do is we will be quickly revising the chapter material and the labor. As you all know that material will be a 5 to 7 mark. And labor is also 5 to 7 mark. So minimum 10 mark, maximum 14 mark area for our examination. So my dear lovable students, ரொம்ப quick-ஆ ஒரு 1 hour to 1.5 hours, we are going to have a revision of the material and labor. Is everything fine? Clear? Bharat is there. யாராவது லைவில் இருந்தீங்கன்னா கொஞ்சம் டெக்ஸ்ட் போடுங்க. Anyone there? Fine, sir, by Bharat. Super, sir. Yes, sir. By Harini. Super. Yes, sir. By clear by Maheshwaran. So we can start the proceedings. Yes, sir. Yes, sir. Yes, sir. By Jenny Brinda, Siripu Subha, Pooja. Yes. Remaining names I am not able to recognize. Super. Good evening to all. Good evening to all. Good evening to all. Yes. So be in the live, you can text it, man. I'll be quickly revising 1 hour, 1.5 hours, entire material and labor. Be with me, we are going to do it. So very happy evening to all my dear lovable students. For our examination, if you see, chapter material and labor are important, very important chapters. Adilime first chapter, material, one of the question what we can get is the landed cost of material. This may be a 5 mark question which may be get in exam. Landed cost of material means, sir, if you are purchasing a material, we have to pay the purchase price. Not only the purchase price, but also lot of other expenses should also be incurred. So you will be getting the total cost basically. And when you are buying 10,000 kg of raw material, there is no need that 10,000 kg should be received by us. Out of that, some normal loss will be there, abnormal loss will be there. After, sir, reducing the normal loss and abnormal loss, only the balance kg will be received. So what is the effective cost per kg is what the landed cost. This may be a 5 mark question for our examination. From that, we will be doing one question. Yes, we are not only going to talk about the formulas. Here and there, we will be revising, very quickly revising the questions also. You also have to solve along with me. Yes and Sons, an unregistered supplier under GST, purchases material from V Limited, which is a GST registered supplier. This is very important point with regard to GST. Supplier is registered, whereas recipient is unregistered. Sir, as per section 16 of the GST, only a registered person can take ITC. That means since this supplier is an unregistered person, at the time of purchasing the material, he will be paying GST. That GST cannot be taken as ITC. Okay, fine. So, whatever tax has been paid should be included in the landing cost. Following information is available for one lot of 5,000 units of material purchase. So whatever cost you are incurring is for 5,000 units if there is no normal loss and abnormal loss. If there is normal loss, that many units has to be excluded. Am I right, sir? Listed price of one lot is rupees 5 lakh. That means the price, listed price is how much lakh? 1 lakh, 5 lakh rupees. So that's what, man. Listed price of material, that is part and parcel, 5 lakh rupees is the cost. Trade discount 10% on the listed price. What is discount? There are 2 discounts are there, trade discount and cash discount. If you are purchasing in bulk, the supplier will give you trade discount. And my dear lovable students, generally at the time of sale by the supplier, seller, he will say that you are supposed to make the payment to me within some stipulated period of time. If you are not paying that, you are not entitled for cash discount. But if you are paying within that time period, it's a help to the supplier. So supplier will give you 1 or 2% cash discount. What is the main difference between trade discount and cash discount? Trade discount will happen before purchases, and cash discount will be happening after purchases. So trade discount will not form part of the cost at all, whereas cash discount will form part of the cost. So 10% of the listed price will not form part of cost at all. That's why 5 lakh into 10% come to 50,000. So from 5 lakh, we have not even paid 50,000 at all. So balance 4 lakh 50,000 only we are going to pay to the supplier. Able to appreciate. So as per section 15 subsection 3 of the CGST Act. Sir, is this costing or GST? There are GST implications, man. What can I do? So as per section 15 subsection 3 of the CGST Act, if the discount, sir, is a discount which has been mentioned in the invoice, for that discount you are not supposed to collect GST at all. Then you are supposed to collect GST only for 4,50,000. So 4,50,000 into 18% come to 81,000. What you should check in costing? Whether ITC available or ITC not available. If ITC available means GST paid cannot be formed part of the cost. If ITC cannot be taken, that will form part of cost. In this case, since the recipient is an unregistered person, as per section 16, only a registered person can take ITC. So this 81,000 will form part of cost, my dear lovable students. So 4,50,000 plus 81,000 comes to 5,31,000. Super. So CGST and SG, sir, credit not available. Credit not available means ITC cannot be taken. So even that also will form part of the cost. Cash discount will be given only if payment is made within 30 days. That is after purchase. It's a financial management item, not a costing item. Super. It is a debtors management, my dear lovable students. Oh, abdingringa, ama. Because whether we have to make the payment within 30 days or whether we have to make the payment within 60 days, sir, whether we have to avail the discount and all, that is an FM topic, nothing to do with the costing. So you have to ignore that cash discount. Where level clarity, sir. Sir, toll tax paid. Sometimes, sir, I would have purchased raw material from this place. Actually, my factory is situated here. In order to bring the raw material from the supplier place to my factory, I'm supposed to incur a lot of directly attributable expenses. All the directly attributable expenses should form part of the cost. That's why toll tax I'm going to include in the cost. Hope you are able to appreciate. Freight and insurance 36,000 I have to include in the cost. Super, sir. Demurrage paid to transporter 5,000 rupees. Sir, demurrage. Where is the demurrage? Sir, demurrage is not formed part of the cost, sir. Sir, demurrage is a penalty imposed by the transporter for delay in uploading or offloading of the material. It's an abnormal cost. Only the normal cost should be included in the cost of landed cost. Demurrage means a penalty because to load the goods, to unload the goods, sometimes supplier would have taken some extra, sir, time. Because of that, is liable to pay some extra cost. Always abnormal cost will not form part of the cost. So be very careful with regard to this demurrage. Demurrage will not form part of the cost. Commission and brokerage on purchases, it's a normal cost. That 10,000 should form part of the cost, my dear lovable students. Super, sir. Amount deposit for returnable containers 30,000. For example, if you are purchasing gas cylinders, sir, generally we are paying money only for gas, not for the gas cylinders. So when you are paying 1,000 rupees, 800 rupees, whatever it may be, that is for the gas, what is there inside the gas cylinder. After usage of the gas, will be returned the gas cylinders. We are actually not paying any amount for the gas cylinders. So 30,000 rupees is what they have paid for the returnable containers. But we got only 26,000 rupees as refund. So out of that, 4,000 rupees has been indirect cost has been incurred. So that's why, sir, 30,000 minus 26,000, 4,000 will form part of the cost, my dear lovable students. So the total cost comes to 5,82,800. Other expenses are 2% of the total cost. Till now, whatever cost you have incurred, in that how much percentage? 2%. Here one logical mistake we will be doing. What will be doing now? 5,82,800 into 2% we will do. You will be getting 11,656. What is the question? Sir, 2% of the total cost. That means if this is 98, 2 rupees is the other expenses, then only total cost will be 100. So this should be taken as 98, a very important adjustment for our examination, my dear lovable students. So take it as inclusive, don't take it as exclusive. I believe that you are able to appreciate or understand what I am talking to you. So you'll be getting total cost of material, sir, 5,94,694 is the total cost you have incurred. And 5% of the material shortage is due to normal reasons. Sir, if you are purchasing goods from the supplier's premises, when it reach our premises, 5% is normal loss. We have to reduce that in denominator. So that's why, sir, 5,000 into 5% is a shortage. So balance only 4,750 good units are there. Exactly same like our process costing. So total cost divided by 4,750 comes to, that is 5,94,694 divided by 4,750 comes to 125.198 per unit or per kg, whatever it may be, will be the landing cost per kg or per unit. I believe that you are able to appreciate or understand this type of question. For a 5 mark in exam, landed cost of material may be tested. We have done with one question from that area. Are you able to appreciate, sir? I'm moving into the most hit area for examination called as EOQ and discount analysis, which is economic order quantity. Sir, what is this EOQ? Sir, EOQ is the order quantity at which total raw material inventory maintenance is minimum. As we already discussed that, my dear lovable students, with regard to inventory management, 2 costs are the headache. Number 1, carrying cost, and number 2 is ordering cost, or rather ordering cost and carrying cost, because first we have to order, then we have to carry. Sir, very simple, just to recall purpose. For example, my dear lovable students, 1,20,000 units is what you required in a particular year. I'm having 2 options. Technically, I'm saying you can purchase the entire 1,20,000 in one shot, or you can purchase 1,20,000 times, sir, this 1,20,000 unit. I'm talking about both extremes. What will happen if you are going for single purchase 1,20,000? Kandipa, the ordering cost will be minimum at this extreme number 1. And carrying cost will be very high because I should have the go down to carry 1,20,000 units. Are you all really with me? Yes, sir. Sir, one question is asking how to find out ITC are available or not available. Question they will be specifically saying, Kana. Here they have specifically said that credit is not available. That's why I have added that to the cost. I believe that you are very clear now. Fantastic to the core. So, come on, sir. This is what scenario number 1. And scenario number 2 is, sir, 1,20,000 units I'm going to purchase in 1,20,000 shots. That's what my extreme number 2. Then my ordering cost will be very high, whereas my carrying cost will be very less. Why my carrying cost is very less? Because I have to carry only 1 unit at a time. So my dear lovable students, sir, if my ordering cost is high, carrying cost is less. Carrying cost is high, ordering cost is less. Dinga, dinga, dinga. Like this, if you play means, costing will be, sir, in a big headache. So that's why we are going to decide a quantity called as economic order quantity, EOQ. Economic order quantity is the, sir, order quantity at which my total raw material inventory maintenance cost is minimum. There are 2 maintenance costs are there. Number 1, ordering cost. Number 2, carrying cost. Sir, in order to apply this formula, basically these assumptions are mandatory. Number 1, annual consumption is known. For example, I am able to say that 1,20,000 units only I need in a year. Super. And I know that every unit I am going to purchase at 3 rupee per unit, 5 rupee per unit, 7 rupee per unit. That's what purchase price per unit is all about. And ordering cost or buying cost, that's means in order to place an order one time, how much cost I am supposed to, I know. That's what ordering cost per order. And my dear lovable students, C stands for carrying cost. C stands for carrying cost. In order to carry 1 unit for 1 year, that's what carrying cost per unit per annum. Carrying cost per unit per annum. For example, you are going to a hotel and you are saying that I need one room. They will be asking immediately one question, how many people are going to be stayed and how many nights you are going to stay. So both are important. For example, you are taking one room and if 50 to 100 people are going to be stayed in one particular room, my dear lovable students, one room is not enough. So how many people are going to stay important and also how much period you are going to stay important. This is called as composite cost unit. In the sense means two things will be there, per unit, per annum. How much I am going to carry and how much period I am going to carry, my dear lovable students, and no closing stock and no lead time. No closing stock and no lead time. These are the basic assumptions in which EOQ formula has been derived. Super, sir. Sir, what is the total raw material inventory cost under EOQ? First of all, I have to purchase the raw material. How many units I am going to purchase? 1,20,000 units I am going to purchase. This is called as annual consumption. Into purchase price per unit. For how much rupees I am going to purchase, whether it is 5 per unit, 6 per unit, 7 per unit, that is called as purchase price per unit. And total ordering cost, sir, total ordering cost is the cost I am going to incur. That depends upon my cost driver. Sir, what is the cost driver? Number of orders. Number of orders. For example, if number of orders increases, ordering cost increases. Number of orders decreases, ordering cost decreases. Sir, what is the cost driver for the number of orders? First of all, let me ask you one question. What is your annual requirement? 1,20,000 rupees is the annual. 1,20,000 units is the annual requirement. How many units you are going to be order in one time? That's what EOQ. For example, 12,000 order if you are going to be order in one time, 1,20,000 divided by 12,000 means 10 orders you will be making. This is the number of orders. So number of orders you will be getting as, my dear lovable students, sir, A divided by EOQ. What is A? Annual quantity. Divided by EOQ. EOQ is what you will be calculating. Into B stands for buying cost per order. Buying cost per order. Super fantastic to the core. With regard to carrying cost, my dear lovable students, what you will be carrying, what you will be ordering, that only you will carry. Sir, what you will be ordering, I am going to order only EOQ, economic order quantity. Sir, if this is my stores, if I order economic order quantity, initially my dabba will be full. Then I will be starting consuming and it will become zero. So at the start, I will be carrying full EOQ, but at the end, it will become zero. In costing, I don't want both the extreme. I will be taking an average. So ideally, it's better to say that I will be carrying half of EOQ. That's what they are saying. Q means EOQ. Divided by 2 means half of EOQ. Into carrying cost per unit per annum is what the total carrying cost. So these are the three costs will be incurring with regard to material. So by applying the formula, I'm not going to derive the formula because my intention is not to show you that how much I know in costing. If you want, get my classes. Regular classes are available. Nearly 150 hours I'm taking. In that, every formula I'll be deriving. So economic order quantity is equal to root of 2AB divided by C. 2 means 2. Sir, that 2 comes from this half, 1 by 2 reciprocal only, 2 by 1. That's how the 2 as came. Into A means annual purchases what you are going to be made. B means buying cost per order. And C means carrying cost per unit per annum. How much you are going to carry, for how much period you are going to be carry. Both are important, my dear lovable students. Sir, that there are two costs are there. One is buying cost and carrying cost. Both this buying cost and carrying cost is called as associated cost in costing. Sir, buying cost, the cost driver is how much time you are buying. Yes, kandipa. That means number of orders is the cost driver. Number of orders increases, buying cost increases. Number of orders decreases, buying cost decreases. So number of orders into cost per order. Whereas carrying cost per annum comes to average inventory, because even though you will be ordering EOQ, you will not carry the 100% EOQ from start till the end, because once you purchase, you will start consume it. So it will become half of EOQ, my dear lovable students. That's what half of EOQ into carrying cost per unit per annum. It's a composite measure. At EOQ, this is a beautiful formula. At EOQ, root of 2ABC will be the total associated cost. Sir, 2A into B into C. If you take the root, you will get the total associate cost. I will prove it to you now itself. At EOQ level, buying cost per annum is equal to carrying cost per annum. Yes, sir. There are two people are there. That's what I was having so much of problem. Sir, rendu pair kadayil dam pottiye. Number one, ordering cost and carrying cost. At EOQ level, my ordering cost will be equal to carrying cost, which will be half of my associate cost. What is associate cost? What cost plus what cost? Sir, ordering cost plus buying cost. Ordering cost or buying cost. And number two is carrying cost. If you add the total, you will get the total cost. You will get the total cost. Sir, this is the total of this is what? Associated cost. Half of associate cost will be buying cost. That amount will be equal to the carrying cost. Sir, how you will find out number of orders? First you tell me what is your annual requirement divided by, sir, every time how much you will order? EOQ. So A divided by Q will be the annual requirement. This will be a very important question. How much time gap will be there between two orders? You want to calculate 365 days or 12 months or 52 weeks or 365 days divided by number of orders. In the sense means, sir, 365 days are there in a year. For example, sir, if you are going to make 10 orders totally, that is a number of orders. So the days between order number 1 and order number 2 will be 36.5 days. And if the price of the goods changes, automatically EOQ level will change. Because if the price changes, sir, carrying cost per unit per annum will change. Why, sir? Because carrying cost per unit per annum is based upon the price of the goods. For example, if you are going to carry two things, number one, diamond, you tell me, we have to preserve the diamond properly. Automatically, the value of the diamond is high. So automatically, the carrying cost per unit per annum of diamond is very high. Or if you are going to carry cow dung, sani, will, sir, same importance will be given to sani. Chee. Sir, that much carrying cost per unit per annum will not be there for sani. That means if the purchase price changes, automatically carrying cost will change. If carrying cost changes, automatically EOQ will be changing. From that, for the application, we are going to do one question. Appa, sir, are you doing questions also? Yes, sir. I'll be discussing questions also. From that, my dear lovable students. Sir, compute EOQ and total variable cost of the following. Annual demand 5,000 units. They have given us 5,000 units. That means the factory, a company need total 5,000 units. Unit price 20 rupees. In order to purchase one unit, 20 rupees is required. Ordering cost. In order to place order once, 16 rupees we are supposed to be spent. Storage rate 2%. Interest rate 12%. Obsolete rate 6%. Basically 2% plus 12% plus 6% will be the total carrying cost per unit per annum. So 2 plus 12 plus 6 comes to 20% will be the carrying cost per unit per annum. Determine the total cost that would result for the items if the new price is 12.8 is used. Just now I have said. If the purchase price changes, automatically the EOQ value will change. Am I right, sir? So my dear lovable students, I am going to calculate part number 1 with 20 rupees as purchase price. Annual requirement. You tell me. What is annual requirement? 5,000 unit. Sir, ordering cost per order. How much is the ordering cost? 16. Sir, what is the carrying cost per unit per annum? 20%. 20% on what? On what is based upon whether it is diamond or sania. Sir, that means 20 rupees is the cost means this may be diamond or this may be sani. So 20 into 20% means 4 rupees is the carrying cost per unit per annum, my dear lovable students. Can we, sir, apply into EOQ? Economic order quantity. You tell me what is the formula for EOQ? Root of 2AB divided by C, which is 2 into 2 means 1 by 2, that 2 reciprocal. What is the annual requirement? 5,000 units is the annual requirement. Into B, buying cost per order is 16 divided by carrying cost per unit per annum. 200 units is the EOQ. That means in a factory, in a company, in a year, if 5,000 units are required, it's better to buy every time 200 units is what the suggestion of this subject. So 5,000 divided by 200 comes to make 25 orders in a year, my dear lovable students. That's what number of orders. Can we calculate the total cost at EOQ? Total cost at EOQ. First, I have to purchase 5,000 units. I should purchase. You tell me, what is the purchase price per unit? 20. Are you also saying along with me? So 5,000 into 20 means 1 lakh rupees I have to spend. What is the magic of EOQ? At EOQ, my ordering cost will be equal to carrying cost. This is what my ordering cost. This is what my carrying cost. At EOQ, always my answer should be one and the same. Sir, ordering cost is nothing. Number of orders. Just now you calculated 25 orders are there in a year. So 25 into what is the ordering cost per order? 16. So 25 into 16 comes to 400 rupees is the total ordering cost I'm supposed to be incurred for a year. Likely the same 400 should be the carrying cost also, but you have to calculate once again. One time you are going to order 200 units. That means at start you will be having 200 units in the stores. Then you will start consume. It will become zero, my dear lovable students. So I am not ready to take 200 units. I am not ready to take zero. I will be taking average of EOQ, which is 100 units. Sir, in order to carry 1 unit for 1 year, I am supposed to spend 4 rupees, man. So 100 into 4 comes to 400 rupees will be my total carrying cost. That means 800 rupees is the associate cost. Associate cost is 800. Super. Sir, so 1 lakh purchase price, 400 ordering cost, 400 carrying cost, 1 lakh and 800 is what the cost to be incurred by this company at EOQ. The same thing can be calculated by this way. Sir, root of 2 into A, B, C. Look, this is what the associate cost. So associate cost is equal to root of 2 into what is annual consumption? 5,000 unit. So I'm going to purchase 5,000 units in a year. What is the buying cost per order? 16. Am I right with the number? 16. What is the carrying cost per unit per annum? 4 rupees. So root of, take your calculator, 2 into 5,000 comes to, you will be getting 10,000. Into 16, you will be getting 1,60,000. Into 4, you will be getting 6,40,000, my dear lovable students. Please put the root of 6,40,000. You will be getting an answer of 800. That's what 400 plus 400 is equal to 800. That's what here we have discussed that. Super sare. This formula, the total associate cost at EOQ will be root of 2A, B, C. Which is A into B into C. If you put the root, you will get the total associate cost. Out of that, half will be ordering cost and half will be carrying cost. I believe that you are able to appreciate or understand the part to the second part of the question. Second part of the question. Second part, instead of, my dear lovable students, purchase price 20, purchase price has been fall to 12.8. If purchase price changes from diamond, it has become Sani. For Sani, carrying cost per unit per annum will change. Annual demand, no change. Ordering cost per order, no change. But the carrying cost per unit per annum will be, sir, 20% of not 20. 20% of 12.8. Now, in order to carry 1 unit per annum per, sir, unit, only 2.56 you are supposed to be spent. That means my revised EOQ. Root of 2AB divided by C, which is 2 into 5,000 units is the annual requirement, into buying cost is 16, divided by carrying cost per unit per annum is 2.56. Come to, sir, 62,500. If you put root 250 units, my dear lovable students, that means in a year I need 5,000 units. I'm not going to order 200 units per time. I will be ordering only 250 units. So 5,000 divided by 250 comes to, I will be making 20 orders. For this 20 orders only, I'm going to incur the ordering cost. Comfortable? So what will be the revised purchase price? How many unit? 5,000 unit. Will you purchase at 20? 12.8. So 5,000 in cost of average inventory will be, one time you will order 250 units. I will be carrying half of 250 units. So 250 divided by 2 na 125 units. To carry every 1 unit for per year, I need, sir, 2.56. So into 2.56 comes to 320. So 320 plus 320, 640 rupees is the total associate cost. This you can find out by way of 2 into A into B into C. If you want, take your calculator. 2 into what is annual consumption? 5,000. You will be getting 10,000. Into B, 16 rupees per order. Into C, sir, carrying costs per unit per annum 2.56, 4,09,600. If you put root, you will be getting 640. That is a total associate cost. Yeah, I hope that you are able to appreciate or enjoy. Total 64,640 is the total cost. So this is, sir, a quick revision of economic order quantity. The another expected area from the material is stock level analysis. I just want to know from you all that are you all enjoying the discussion of the landed cost and expected area? Number 2, an EOQ, economic order quantity, associate cost. If the purchase price changes, automatically the EOQ changes and the associate cost also changes. I hope that you are able to appreciate or understand. If yes, I just want to know in the comment section, and I'm moving into another expected area called as stock level analysis. A very important area. We are having reorder level. We are having minimum stock level, we are having maximum stock level, we are having average stock level, we are having danger level also. That means if you take a particular, sir, stores ledger, my dear lovable students, sir, particular stores ledger, let it take the sugar dabba in the kitchen. Amma is maintaining sugar dabba, Amma is maintaining rice dabba, Amma is maintaining dal dabba. Sir, there are different forms of stocks are there. You just understand like that. In that dabba is nothing is there. So we can call it a zero stock. Sir, no costing knowledge is required. Array, nothing is there in the dabba. Then it is called as zero stock. Right? Super. Then costing is introducing a new concept called as danger level. Danger level means it's a level in the dabba. That means if the stock is only this much is there, anytime you may become stock out. That's what danger level is all about. That's what danger level is all about. It's like a siren. Oh, you do something, man. It is, sir, going to be a stock out situation. So zero level means nothing is there. Danger level means something is there, but there is no sufficient. So no one, sir, would love to go to the danger level. No one would love to go to the danger level. So everyone wants, sir, minimum level. Every company want to maintain minimum level. This is the level minimum, sir, they will be keeping, man. So, enga recall pannu, sir, below zero level, nothing is there. Then danger level, then minimum level. Please picturize. And next one, reorder level. This is a level at which you will call your supplier and say that, Kana, please send the next lot, Kana. This level is called as reorder level. Reorder level. At this level, you will be ordering the economic order quantity. Wow, fantastic to the core. Sir, what is this? Reorder level. Reorder level is the level at which we will place the order. That means in dabba, sir, when the stock, sir, generally this much stock will be there. When the stock after consumption, it reaches this point, we will immediately call our supplier and say that, sir, please send up, sir, next lot. That's what reorder level. At reorder level, we will be ordering the economic order quantity, my dear lovable students. Then this is a maximum we can fill in the dabba. So that is a maximum level. What level, man? Maximum level. So between maximum level and minimum level, you are having average level, man. Between maximum level and minimum level, you are having average level. So 1, 2, 3, 4, 5, 6. There are 6 stock levels are there. There are 6 levels are there. Right? Okay. Sir, kira, rumba kira. It's what level? Zero level. Then next one, what, man? Danger level. Danger level. Then minimum level. Then reorder level. Then average level. Then maximum level. With this background, sir, I am moving into the formula derivation. Quickly, we will solve one by one. Reorder level. Sir, what is reorder level? That is a level at which you will place the order. Fantastic, sir. Sir, what is this? There are two formulas are given by our subject costing. Number one is called as old formula. Number two is called as Gen Z formula, right? You all are Gen Z kids, no? So Gen Z formula. What is this reorder level? Maximum consumption into maximum lead time is what the reorder level. What is this maximum consumption into maximum lead time? For example, in my factory, sir, consumption can be classified into two categories. Minimum consumption and maximum consumption. You tell me, sir, if tomorrow is the examination, you will be study a lot. But if you are going to write in next attempt or very, very next attempt, that much you don't study. Am I right, sir? So, for example, how many minimum chapters you will be studying? Sir, I will be studying 2 chapters minimum. How many maximum chapters you will be studying? Sir, I will be studying 10 chapters maximum. That means my average chapters will be 2 plus 10 divided by 2. That means 6 chapters will be the average. The same way in a factory, minimum consumption will be there, average consumption will be there, maximum consumption will be there. Sir, the same way we are having a concept called as lead time. Sir, minimum lead time is there, maximum lead time is there. In the sense means you are calling the creditor, supplier, and you are saying that, sir, I need the raw material. Sir, surely he may take 1 or 2 days. Minimum, if he takes, sir, 2 days of time. Or he is saying that, sir, in my hands itself stock are not there. Let me order to my supplier. And for that, maximum it will be taking 8 days. Max within 8 days I will supply to you. So, my average lead time is equal to 2 plus 8 divided by 2 comes to how many days? 5 days. So, even the lead time can also be classified into maximum lead time, minimum lead time and average lead time. Someone is asking, is it live? Yes, yes, I am live only man. I am live only man. Yes. So, my dear lovable students, sir, this is what average lead time. This is what average lead time. So, what the old approach, parents approach, traditional approach, Parayagala approach is maximum consumption into maximum lead time. What you will be thinking, no, okay, in my factory, sir, 10 units I will be maximum, 10 units I will be maximum consuming in 1 day or 1 time. Into maximum lead time, if I am ordering now, my supplier will be taking maximum what man? 8 days. So, in my bin, if the units become 80 units, my dear lovable students, I will immediately place an order. That's what, sir, maximum consumption into maximum lead time. You just think a situation. My factory is working full-fledged. How you are studying now, the same way. That means, sir, if the exam is very near, you won't study 2 chapters, you won't study 6 chapters, you'll be studying 10 chapters. Am I right? That's why, sir, maximum consumption is 10 units. And assuming, sir, you just think a situation. You just call to your supplier and supplier is taking long time. What is the maximum time you'll be taking? 8 units. Sir, 8 days. So 10 into 8 comes to 80 units. So in your bin, if 80 units are there, let the factory consume max. Let the supplier take max. Still, my production will not stop. That's why, that's what the, sir, traditional approach is all about, or the parents approach or traditional approach is all about. Both you take maximum consumption into maximum lead time. Comfortable with first formula? Can I move into the reorder level second formula, which is nothing but Gen Z formula, my dear lovable students? Sorry, when I will be studying maximum? If 1 day I study maximum now, sir, I will be so proud for that for the next 3-4 days. I will not be having that consistency throughout and all. Sir, please don't take maximum. Then I'm asking, can I take minimum? Sir, you take average, sir. Take average consumption, sir. Take average lead time, sir. That's what Gen Z approach is all about. Average consumption into average lead time. Average consumption to average lead time. And Gen Z is saying that always please keep the safety stock, sir. Safety stock is the minimum stock, buffer stock. You will be keeping always, sir, just to cope up with the stock out. So this is the second formula from the reorder level. If you see our chart, this is the reorder level. At this reorder level, you will place the order. So at reorder level, we are having 2 formulas are there. One is parents formula and number 2 is Gen Z formula. Sir, if no safety stock information has been given in the question, please use parents formula, which is maximum consumption into maximum lead time. If Are girlfriend illaya? Gen Z formula. Sir, if safety stock information has been given, average consumption into average lead time plus safety stock. Yes, at this point, I will place the order. That is called as reorder level. That is a level at which I'll be placing the order. Super, sir. I'm coming into the maximum stock level. Are I am coming and revising for you. 2 chapters I'll be revising, material and labor. You know why I am revising these 2 chapters? You should get the maximum mark in costing. Everyone should get an exemption. If possible, maximum mark. You tell me, what is a maximum mark? 100 mark is the maximum. You just say to entire Tamil Nadu, entire CA fraternity that ANM sir is a reason for, sir, you getting maximum mark in costing. You should do one thing for that. If you want the maximum mark, reduce your, sir, mistakes. Reduce your mistake. If you are making 0 mistake, you will be getting what, man? 100 mark. That's a maximum mark. Sir, if you want to get 99 mark, you have to make only 1 mistake. That means in order to get the maximum level, you should reduce the minimum. You should reduce the minimum. Because if I reduce the minimum mistake, okay, from 100, I'm reducing 0, I will be getting 100. From 100, I'm reducing 1, I'll be getting maximum mark of 99. Are you understanding the logic? So if you want to get maximum mark, your error should be minimum. That's why, sir, at this point, you will be again, let me go back once again. At this point, you will be again, that is at reorder level, you will put the order, man. This is reorder level. At this already reorder level means some stock is there in the dabba. At that time, my dear lovable students, you will place the order. What order you will place? Economic order quantity you will place. That's what reorder level plus reorder quantity. Reorder quantity means economic order quantity. Both are one and the same. So, by the time, if you put order today, it will take some days to reach that order. What you have ordered? How much you have ordered? EOQ. Then you will again put that into the bin. By that time, you will be consuming something. That consumption may be minimum consumption, maximum consumption, or average consumption. If you reduce maximum consumption, maximum minus maximum, you will get only 0, yaar. I want the answer as maximum level. Maximum level means answer should go up. Answer should go up means I should reduce only minimum. That's why I'm reducing, sir, minimum consumption to minimum lead time. Where level, sir? Fantastic to the course, sir. So you tell me, sir, 2 formulas we have derived. Reorder level is equal to, my dear lovable students, sir, maximum consumption into maximum lead time, or average consumption to average lead time plus safety stock. Done. Next one, maximum stock level. If you want to get maximum mark, you have to reduce some minimum mistake. You have to commit minimum mistake. So, where you are, now you are in reorder level. At reorder level, what you will order? Economic order quantity you will order. That's what reorder level plus reorder quantity minus what you are supposed to be reduced. Minimum rate of consumption into minimum lead time. I'm coming into the next one, man. Sir, minimum stock level. Sir, I want minimum as answer. To get minimum as answer, if I reduce maximum, ulta logic, I will get 0 as answer. Am I right? Am I right? Because if you want to get minimum, if I reduce maximum, what is a maximum mark? 100, sir. If I want minimum mark, if you want minimum mark, if you reduce maximum, you will get 0 as answer. Hence, don't reduce minimum. For maximum, minimum has to be reduced. For minimum, average has to be reduced. That's why for minimum stock level, where is minimum? It is below reorder level. So take this reorder level. Sir, I want to get an answer below that. So I can't add it. If I want above, I will add it. If I want below, I will reduce it. Where level, sir? So, reorder level minus average consumption into average lead time, because I can't reduce maximum. Sorry, I can't reduce minimum also, because answer itself I want is minimum. So, I will be taking, sir, average consumption into average lead time. Sir, what is this average inventory level? Which is nothing but minimum level plus maximum level divided by 2 accounting formula, or minimum level plus, sir, this is what average level. It is above minimum level. So from here, I have to go here. That means will you plus or minus or? Plus. That's why minimum level plus. Sir, half of EOQ is the another approach. Half of ROQ, that is reorder quantity, which is nothing but EOQ, my dear lovable students, or opening stock plus closing stock divided by 2. Danger level. If my stores are showing this level, I will say that, sir, I will be saying sign. Sir, that is danger. That is danger. Sir, which is nothing but average consumption. I will not go into maximum consumption. Average consumption into lead time for emergency purchases. I am calling my supplier and saying that, sir, you do whatever you want. I want the material as quick as possible. Whatever you want, I'm ready to do for you. He's saying that, sir, one day it will take, sir. Without one day, I can't. That's what lead time for emergency purchases. So one day I have to run my factory. So to consume that, Gen Z approach is average consumption. So average consumption into lead time for emergency purchases. Sir, one day my average consumption in my factory is, I already decided what is my consumption. Average consumption is 6 unit. So 6 unit. If I'm having only 6 unit in my stores, I can say that I am at the danger level. These are the various formulas, my dear lovable students, of stock level, reorder level, maximum level, minimum level, average level, danger level, zero level means nothing is there. Sir, that's it with regard to that. There are 6 stock levels are there. Romba keele, zero level, nothing is there. Above that, danger level, picturize. Then minimum level, that is a minimum, sir, quantity every company will be keeping. Then reorder level, it's a level at which they will place the order. Then average level and also the maximum level. Sir, I will be doing one question. I believe that you are feeling so much comfortable with regard to the revision. Following information is extracted from the purchase department of A Limited. Number of units to be purchased during the year is 10,000. This is the annual requirement. Total 10,000 units to be purchased. Cost of placing an order is 40. In order to place one order, 40 rupees. Purchase price per unit is 80. Sir, that is a cost. That is Diamond versus Sani for purchasing 1 unit, 80. Insurance charges to be paid for protecting goods during transit is 20. Sir, this is again a cost I'm supposed to be incurred. Insurance charges to be paid. Just now we have studied that it should be included in the landed cost. Cash discount to be received 2%. Put it on dustbin. We will consider only the trade discount. Annual cost of storage per unit is 5. Look at the word annual cost. That means carrying cost per unit per annum has been given. So rupees 5. Details of lead time. Sir, average 20 days will be taken. Maximum 30 days will be taken. Minimum 10 days will be taken. For emergency purchases, 8 days will be taken. This emergency purchases will be used for danger level. Correct? Danger level. Rate of consumption, average 30 units and maximum 40 units. Actually, minimum consumption has not been given. From that, you can easily calculate the minimum consumption because, sir, average consumption is equal to minimum plus maximum divided by 2. What is the average consumption given? 30 is the average consumption given. You can take minimum as X plus maximum they have given as 40 divided by 2. We can easily cross multiply. 30 into 2 is equal to 60 is equal to X plus 40, my dear lovable students. That means X is equal to 60 minus 40 is equal to 20. You can rework also. Sir, if 20 is the minimum and 40 is the maximum, total come to 60, divided by 2 comes to 30. It is exactly matching with the average consumption. I believe that you are able to appreciate or understand what I'm talking to you. Super fantastic to the core. Sir, basic data. First, calculate the EOQ. We are masters in EOQ. What is EOQ? Root of 2AB divided by C. 2 means 2, inverse. Annual material requirement 10,000 units, which is already given in the question. 10,000 units is the annual requirement. What is the ordering cost per order? In order to order one time, 40 rupees we are supposed to be spent, directly given in the question. See, carrying cost per unit per annum. 5 rupees is the carrying cost per unit per annum. Purchase price, landed cost ka, sir, principle you should apply, which is 80 plus 20 comes to 100 because all the directly attributable expenses should be included in the purchase cost. Sir, cash discount is treated as an interest and finance item, thus it is ignored. That you come after 1 or 2 days because I'll be revising financial management. This is costing subject. Only cost I have to consider. Only the finance cost. Cost of the product should be considered, not the finance cost. Able to appreciate? So reorder level. What is this reorder level? Have they said anything about the safety stock? No. So go to the parents approach, not go to the Gen Z approach. Am I right, sir? So maximum consumption into maximum lead time. What is a maximum consumption? Let me use this for question. The maximum consumption is 40 units per day. So 40 into what is the maximum lead time? Maximum lead time is 30 days. So 30 days is 1,200 units. That means in your bin, if it shows 1,200 units, go for next order. Super fantastic. What is a maximum level? Beyond that, you can't carry. So if you want to get maximum mark, reduce your, sir, mistakes to minimum. That's why reorder level. At this 1,200 units, you will place the order. How much you will place the order? Sir, you will place the order of EOQ, you will place the order. That is a reorder quantity. Sir, economic order quantity is equal to reorder quantity. Am I right, sir? Which is root of 2AB divided by C, which is 2 into 10,000 units into 40 divided by carrying cost per unit per annum. Root of 1,60,000. 400 units is what? You will be ordering one time. So when it is 1,200 units, 400 units, you will place the order. So total 1,600 units will be there. But in order to receive the goods, surely supplier will be taking some time. By that time, some units will be consuming. So, since the answer we want is maximum, mistake should be minimum. Please reduce minimum consumption to minimum lead time. Minimum lead time is 10 days. And minimum consumption, we already find out here. Minimum consumption is 20 units. Am I right? So, 20 into 10 comes to 200 units. You should reduce from here. So, from the answer, what you have find out here, if you reduce 200 units, that is 1,600 minus 1,000, varum 200 units, 1,400 units will be the maximum level. Beyond this level, please don't pile up the inventory. Then I have to go to financial management and teach you inventory management, my dear lovable students. I hope that you are able to appreciate. Minimum level. That is a minimum stock you should keep. Sir, in order to get the minimum, if I reduce maximum, minimum level will be 0. So don't reduce maximum, please reduce average, Gen Z approach. That's what reorder level minus average consumption into average lead time. My reorder level already fixed 1,200 units. So 1,200 units minus what is the average consumption? Look at the question. My average consumption is 30. What is my average, sir, lead time? Average lead time is 20 days. So 30 into 20 means 600 units, my dear lovable students. From 1,200, if you reduce 600 units will be the minimum level. Danger level. Danger level. Sir, when the stock reaches that time, sir, siren will come. In the sense means average consumption into lead time for emergency purchases. What is the average consumption? Gen Z approach, not the parents approach. Alright, average consumption is 30 units. Minimum, sir, bare minimum, that guy will take 8 days. So 8 into 30 comes to 240 units is the danger level. If you plot all these in a chart, let it be for our time saving, let me take here itself with this answer, man. Look at the reorder level here. Your reorder level here, it's coming to 1,200 units. In examination, you can check because stock level, 6 levels of stock are there. 1,200 units is the reorder level. Look, 1,200 units. The next one, you find out maximum level, 1,400. Sir, it should be more than 1,200. Super. Super fantastic. Then, my dear lovable students, minimum level 600 units. Look, 600 units are lower than reorder level. Yes. And danger level should be even less than minimum level. That's what 240 units, my dear lovable students. And 0 should always be 0. This you can plot and you can check in the examination itself that what you are doing is correct or not. That's it with regard to the stock level discussions. Also, we are done with that concept also. Next. An expected question is material turnover ratio. I hope that those who are listening to this is getting a super control over topic number 1, that is landed cost in material. Number 2, my dear lovable students, EOQ, economic order quantity. Number 3 is the clarity will be where level and stock level. We are not by hearting any formula, we are deriving all the formulas. And next one is the material turnover ratio. In the sense means, for example, if 2 materials are there in stores, how much times it is there in the stores itself? What is the performance of that raw material? Sir, inventory turnover ratio or material turnover ratio. Since we have already studied FM ratio analysis, this is Paka, which is, sir, raw material consumed divided by average stock of raw material. So, inventory turnover ratio is equal to raw material consumed divided by average stock of raw material. Super. Where average stock means opening stock plus closing stock divided by 2, accounting formula. Average number of inventory holding period is equal to 365 days divided by inventory turnover ratio. That means, sir, we are going to learn the next concept in material chapter, that, sir, raw material related to raw material performance. Either you can measure the performance of raw material in days, called as raw material holding period. If you want in days, then 365 days. Then only if you, whatever you are putting as numerator only will be divided as denominator, right? Super, sir. Sir, 365 days divided by raw material turnover ratio. Sir, what is this raw material turnover ratio? I don't want in days. I want in time, sir. Then nothing, man. Raw material turnover ratio is equal to raw material consumed divided by average stock of raw material. That's it. So we are going to crack that area by doing one question. Abdiya, come on. From the following data for the year ended 31st March, calculate the inventory turnover ratio of two items and put forward your comments on them. This may be a 5-mark question. You are having two raw material A and raw material B, which are there in the stores. Opening stock is 10,000, purchases are 52,000, and closing stock is 6,000. You tell me raw material consumed is equal to opening stock plus purchases minus closing stock. That means already you were having 10,000 units of opening stock was there. Plus 52,000 units you have purchased. So in stores, 62,000 of raw material was there. But at the end, you are having only 6,000 units, means 56,000 raw material has been consumed. Super. Because more the consumption, more the production. More the production, more the sale. Sir, with regard to material B, 9,000 units was there as opening stock. 27,000 rupees of purchases has been made. Total 36,000 of raw material was with us. But at the end, 11,000 rupees of stock has been piled up, means 25,000 rupees of raw material has been consumed. That's what, sir, they are saying 56,000 and 25,000 as the raw material consumed, which is nothing but opening stock of raw material at purchase of raw material minus closing stock of raw material. Now I'm going to calculate the inventory holding period. Inventory holding period. Sir, I can either express in ratio, that is times, or I can express in days. Am I right, sir? So what is the formula for material A? Raw material consumed divided by average stock. What is average stock? Opening stock plus closing stock divided by 2. Because I'm not ready to take opening stock, or I am not ready to take, sir, closing stock, because always in costing subject, we will be following a average. Sign this sign, don't take it wrong, man. Average in the sense means I will not take it, sir, what, man, opening stock or rather closing stock. Because in costing, if you have purchased very recently, my dear lovable students, there is a huge chance that my closing stock may go up. So if I value based upon the closing stock, then I will be in a big trouble. So don't take based upon closing stock. Don't believe closing stock. Don't believe opening stock. What is the average stock matters. That's why I will always take average stock. So 10,000 plus 6,000, 16,000. Divided by 2, 8,000, my dear lovable students. So 8,000 is the average stock. So what is the raw material consumed? 56,000 divided by 8,000 means 7 times is the raw material consumed. Raw material turnover ratio. What is the 7 times represent? That means from start, if you see, my raw material is already there in the stores. I would have purchased the raw material, it would have gone out one time. Then I would have purchased the raw material, I would have gone out second time. Sir, I would have purchased the raw material, it would have gone out third time. Like that, my dear lovable students, 7 times it has happened during the year. Good. Because I am not purchasing raw material to keep the raw material in the stores. Raw material should be moved from stores to the work area, and from work area it has to be converted into finished goods, and it has to be moved into go down, and from go down it has to be sold to the debtor. That's what the working capital cycle is all about. Am I right? Whereas with material B, material consumed is only 25,000. Whereas my average stock, which is opening stock plus closing stock divided by 2, you tell me 9,000 plus 11,000, which is 20,000, divided by 2, na? Sir, 10,000. So 25,000 divided by 10,000, it's only 2.5 times slow moving. Because maximum time that material was there in the stores. So my dear lovable students, sir, I can say that material A, once I purchase, sir, it was there in store for 52 days. That means once in every 52 days, purchase, get out, 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 and purchase, get out. 7 times it has happened. Because in a year, if 365 days are there, 7 times means 365 divided by 7 comes to nearly 52 days. My raw material has been stayed inside the stores. That itself is high, but it's better as compared to material B. In the sense means, sir, for material B, if you are taking the same 365 days, my raw material turnover ratio is only 2.5 times. So 365 divided by 2.5 comes to 146 days dandama that raw material was there inside my stores. So this comment is very important. Material A is moving faster. According to me, even that is also not moving faster, but as compared to material B, that's what they want as the comment from you. Sir, this is how we have to, sir, make the comment. Then we'll be analyzing the reason why this material B is sleeping like this inside the stores. And material A, chuma tuck it, coming and going, like that in an year 7 times. So we will try our level best to increase the turnover of the raw material B. Once it reaches to competitive level of material A, then we'll be again seeing for material A also. That's what the next topic of material turnover ratio. This may be an expected 5-mark area for your examination, my dear lovable students. A very important area called as stockout and probability analysis. Just now we have talked about the danger level. Sir, once it goes below danger level and factory is asking for stock, I have to say that I don't have stock. Then what factory will be doing? Then factory will be doing, my dear lovable students, simply sitting. They will not be able to, sir, do the production. Then they will be simply sitting. Am I right? That situation is called a stockout. If stockout happens, means, my dear lovable students, it will be a loss for the factory. I'm going to find out. Mrs. Styro Tubes trade in 4-wheeler tires and tubes. It stocks a sufficient quantity of tire for almost every vehicle. In year ended 21-22, the report of sales manager revealed that Mrs. Styro Tubes experienced stock out of tires. The stock out data is as follows. Sir, stock out of tires 100. Customer is coming and asking you that I want 100 tires. You have to say that no, sir, I don't have 100 tires. What is the probability? How much times customer is coming and ask? 2 times. There is only a chance of first customer coming and asking, you want 100 tires. You are saying that no, you don't have stock. Second customer, in a year of 365 days, second time he may come and ask that, I want, sir, tires. You are saying that no, I don't have. Then 80 stock, 5 times customer may come and ask and you may say no. 50 tires, 10 times, 10 customers may come and ask, you may say no. 20 tires, 20 times. 10 tires, 30 times, 0, 33 times. Addition information. Tyro Tubes loses 150 per unit due to stock out and spend 50 per unit on carrying of the inventory, my dear lovable students. So every company want to not have the situation of stock out. If you don't want stock out, then carry the stock. 100 tires, 2 customers may ask. Sir, for that, by believing these 2 customers, it's like raining in Chennai. Varum வராது வராம கூட இருக்கலாம் ஆனா வந்து வராது வரும் வராது. My dear lovable students, by believing that 2 times of opportunity, if you are carrying that 100 tires in your hand, how much carrying cost you are supposed to be incurred? So this is a game between stock out cost versus carrying cost, not the ordering cost versus carrying cost. Stock out cost versus carrying cost. Sir, that's what they are saying. In order to carry 1 tire per annum, 50 rupees you are supposed to be spent. But without carrying, if you are saying that no to customer, you'll be, sir, losing 150. So what is the ideal or optimum safety stock? So you are going to determine the safety stock. Super question. Good question, man. Sir, I'll be explaining this question. Please be with me and get the maximum out of it. Because this is a Kolar question available in ICAI study material. No one will be able to appreciate or understand this question also. Situation number 1, they are saying that 100 tires, 2 times they may come and ask. Quickly, I'll be explaining. So if you are, sir, by believing that 2 times, if you are going to keep 100 tires as stock, safety stock, there won't be a situation of stock out at all. There won't be a situation of stock out at all. Sir, what is the probability of happening that? Look at here, man. Sir, 0. 0 means, sir, 0 stock out. 33% is the probability. If you are keeping 100 tires as stock, whenever customer comes and asks you, you can deliver that. You can give that. So there is no question of what at all, stock out at all. If that is the case, my dear lovable students, sir, there is a probability of 33% that you won't go for stock out. That's why probability 33%. Don't pick the probability from here. 2% you will go wrong because this is a probability of stock out. But if I am keeping sufficient stock, there is no concept of stock out at all. 0 stock out ka probability 33%. That's why 0.33. Sir, if there is no stock out, there is no concept of stock out cost at all. There is no expected stock out cost I have to be spent. Am I right? But I have to carry 100 units. To carry this 100 units, to carry every one tire, 50 per unit will be the cost I'm supposed to be spent. So 50. So 100 into 50. 5,000 rupees will be the total cost at this scenario. So my dear lovable students, if you are keeping 100 units as safety stock, any unexpected demand up to 100 units can be met. What is situation number 2? In this 5,000 rupees I am supposed to spend, then I am deciding to keep a safety stock of 80 units. What is the problem? If I keep a safety stock of 80, there is a chance that some customer will come and ask for 100 tires. Then I can't deliver 20 tire. I can deliver only 80 tire. So if I'm keeping safety stock of 80, you just think if some customer is coming and asking 50 tire, I can deliver 50 tire from 80 tire. If some customer is coming and asking 20 tire, I can deliver 20 tire from 80 tire. If some customer is coming and asking 10 tire, I can deliver 10 tire from 80 tire. But if a customer is coming and asking 100 tire, I can deliver only up to 80 tire and my stock out will be 20. But in order to come and ask this 100 tire, how much, sir, probability is there? It is only 2%. That's why 2%. So my dear lovable students, my stock out cost will be, I have to say that for 20 tires I don't have, so 150 rupees I will leave if I am not able to sell that. So 20 into 150 comes to 3,000 rupees will be my stock out cost. 3,000 rupees will be my stock out cost. But sir, the probability of happening this is only 2%. So 3,000 into 2 means 60 rupees I may lose. If I say to the customer that, Kanna, I don't have 100 tires, Kanna, I am having only 80 tires. Now, what is the carrying cost? My dear lovable students, I am going to carry 80 tires. 80 into, in order to carry every tire 50 rupees I have to spend. So 80 into 50, 4,000. So 4,000 plus 60, 4,060 will be the total cost I am supposed to be spent if I decided to carry 80 units. Earlier, how much? 5,000. This situation 1 will never work. This is better situation as compared to the last one. Then situation number 3. Situation number 3 is 50 units. If you are carrying only 50 units, if some customer is coming and asking 20 units, you can deliver. If some customer is coming and asking 10 units, you can deliver. But if customer is coming and asking 100 units, you can give only 50. The balance 50 will be stock out. If you are carrying only 50, if another customer is coming and asking 80, you can deliver 50, but unsatisfied amount of 30 will be there. I believe that you are able to appreciate or understand. So, in order to happen scenario number 1, only 2% chance are there. In order to happen scenario number 2, only 5% chance are there. That's what 5%. So my dear lovable students, stock out cost means, sir, I will not be able to serve 50 unit. So 50 into 150 will be swaha. Here 30 into 150 will be swaha. In order to lose this 7,500, I am having only 2% probability. In order to lose this 4,500, I am having only 5% probability. So 375 will be my stock out cost. But if I am carrying 50 unit, 50 into 50 per unit, 2,500, I should spend totally 2,875. This is the least. So, an unexpected customer comes and stock out cost happened also, no problem. 2,875. This is 2,140. Next one I'm not doing. I'm just going to show the answer for you, my dear lovable students. If it is 20, you tell me, if someone is coming and asking 100 units, I can't deliver 80 units. If someone is coming and asking 80 units, I can't deliver 60 units. If someone is coming and asking 50 units, I can't deliver 30 units. If someone is coming and asking 20, I can deliver. So 80, 60 and 30 is the calculation. That's what I've done here, 80, 60 and 30. That's the minimum to minimum 2,140. My dear lovable students, here 2,195, it is increasing. Here it is 2,700, it is increasing. It is, sir, so it's better to have the safety stock. Sir, this is the minimum cost, 2,140. So keep only 20 units as safety stock. Even in stock out, let it happen. Because 2 times in a year only customer may come and ask that he wants 100 tires. Are you all really with me? So that's what the conclusion we are supposed to be, right? So at safety stock of 20 units, total cost at the least is 2,140. This is a fight between what cost and what cost? Carrying cost versus stock out cost. Able to appreciate. Stock out means the demand of item that could not be fulfilled because of insufficient stock level. Since we are not carrying the sufficient stock as our stock, I am not able to satisfy the customer. Safety stock is a level of stock of any item which is maintained in excess of lead time consumption. Super. So this is not lead time consumption stock. in over and above the lead time consumption, I'll be keeping a safety stock. That's what it is, kept as a cushion against any unexpected demand for that item. Suddenly, if customer comes and asks that I need this much tire, I don't want to say to that customer that illada kanna. For that only I have to maintain the safety stock. Or my factory also, I can't believe. Sometimes, sir, my production manager may be so much cushy. Sometimes production managers, sir, likely party or the person would have become the CM or PM or someone. So that day production will be very level. Sometimes immediately he may ask for more number of units from me, even more than maximum consumption. So when he's in good mood, I can't say to my production manager that, sorry, pa, that much stock we are not carrying. So today you can't do the production. Whenever he's asking, I should be able to issue it. That's what that discussion is all about. Sir, we are moving into the next discussion called as ABC analysis, my dear lovable students. Another 5-mark area, expected area for examination, ABC. This much concepts are there, even though the chapter is material, a very important chapter for examination. Here and there, they'll be spreading. Sir, those who are listening to me, I believe that you are able to appreciate, sir, this ABC analysis. We'll be doing straight away one question from ABC analysis. From the following details, draw a plan of ABC selective control. What this scheme is saying that you have to classify your inventory into A category, B category, and C category. So if you are having 15 chapters in costing, will you study all the 15? Technically, no. But we will give more weightage to the other chapters. The same way, A category means this category of item consists of small percentage. Percentage will be less. 10% only will be covered. But it will cover 70% of value. That means, in my factory, in my stores, nut is there, bolt is there, diamond is also there. Out of the total inventory, 10% only diamond, but its value is 70%. That's what A is all about. A means always it will be number 1. For example, ANM, number 1. It likes 7, MS Dhoni, so 70%. That's what A category is all about. Next one, man, B category. Percentage wise, it will be 20%. My dear lovable students, sir, 20% is what B category, and it will be covering 20% of the value. Sir, C category means remaining 70%. Super, sir. So you tell me 10 plus 20, 30, 30 plus 70, 100%. So here it will be 70 plus 20, 90%. Sir, 10%, total again 100%. This is what ABC analysis. You keep this in your brain. Because A means number 1, 10%. B means second data, 20%. C means, sir, 70%. That's it. Here value wise, 70, 20, 10. You ulta here, man. 70 you put here, 20 you put here, 10 you put here. So you keep this, sir, you'll be able to write it. Sir, that's what they are asking. Item number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. In your stores, there are 12 types of raw material are there. These are the number of units. That means, sir, just think a situation where in your pocket 2000 rupees note is there and 2000 rupees coin are there. 2000 rupees coin, it will make noise. Sometimes only 1500 rupees coins are only there and 2000 rupees notes may be happily sleeping. 2000 rupees notes will not make noise. Am I right? So my dear lovable students, the same way you may have number of units like nut, bolt and all. Don't go and do the ABC analysis there. Look at the value also, unit price. So first you have to find out the total cost and ranking. 12 items are there. You have to put the units column, my dear lovable students. How many units are there? And what is the percentage of the units? Because A category comprises of only 10%, but value 70%. Quantity wise 10%. So that's what I will be finding out the percentage. Sir, this is the units proportion. Then units cost already given. Then number of units into total cost, I will be getting the value. Then percentage. Then I will be ranking based upon the rank. Then basis for selective control. This is an assumption, pure assumption. I'm thinking that 50,000 and above are A items, 15,000 to 50,000 are B item, below 15,000 are C item. On that basis, sir, I will be picking category A. What is the speciality of category A? Category A, if you see now, only 10% of the items will be there. So item number 11, 12 and 5 will be rank number 1, 2, 3. I've ranked here. These 3 items only I'm going to take care. If you see in the total number of units, it comprises of 33%. Whereas, sir, in the cost, it comprises 60% because up to 70% I will park. Only value is important. Sir, why you have not included another more item? It will cross beyond 70%. Sir, you said only 10%. Array, every question it won't be. It is a theoretical base. But when you apply up to 70% of the value, sir, this much raw material are there in your stores. No, taken care of this 3 raw material. Category A, that itself covers 60% of the value of the raw material. Super, sir. Sir, category number B is number 2, 20%. Look here, 20%. If you are taking care of 1, 2, 3, 4 item, which will be covering 20% of the unit and 20% of the value. So 60 plus 20, now itself 80% you have taken care. Remaining 13% is like kuppa. In the sense means 1, 2, 3, 4, 5. Sir, 5 items are there. Sir, it's if you see 42% will be the total percentage in units, and it cover for, only 13% of the value. This is the final summary. Category A, category B, category C. This much percent. If you are ready to take care 33% of the total material, you can cover 60% of value. If you are taking care 24%, you can cover 26%. If you are taking care 42%, you can cover only 13%. This is an ABC analysis, my dear lovable students. I'm moving into the last expected area from material called as pricing of the material issue and inventory valuation. Like FIFO, first in first out method. Sir, LIFO, last in first out method, simple average price method, weighted average price method, base stock method, replacement price method. We'll be doing one question from that area. Sir, with that we can announce we are done with the revision. Every area I have touched, even though it's a marathon, even though it's a revision. Following information is extracted from the stores ledger. Material X opening stock nil. This much has been purchased. January 1, 100 units has been purchased at 1 per unit. January 20, 100 units has been purchased at 2 per unit. 2 purchases has been given. Issues January 22nd. So after both purchase only issues has been happened. 60, sir, for job work 16 and 23 January 60 for job work W17. Complete the receipts and issue valuation by adopting FIFO, LIFO, weighted average. I tried to explain all the method. Tabulate the value allocated to job W number 16, job W number 17 and closing stock under the method aforesaid and discuss from different point of view which method you will prefer. This may be a 5-mark question. Sir, if you are following FIFO means first in, first out. 2 purchases you have made. January 1, 100 units at different value, rate 1 rupee and 2 rupee, 100 and 2. Sir, there is no issue at all. This will be the balance. Sir, 2 different lots are there. 100 at the rate of rate 1 rupee, 100. Balance. Sir, this is what method? FIFO method. This is FIFO method. Am I right, sir? If it is FIFO method, sir, you would have issued. How many units you need issued? Issue is 60 and 60 units you are supposed to issue. Balance here issue 60 units will go out. On this date, the same will be continued here. 60 units will go out. 60 into 1. FIFO first in, first out. So first this came. So 60 into 1, 60 will balance 40 into 1. If the balance 40, total 100 units was there. Out of this 100 man, 60 units would have gone out. Balance 40 will be there. Then in the next issue, this balance 40 into 1 at the rate of 40 will go out. Super fantastic to the core. 40 into 1 at the rate of 40 will go out. Balance you will be having here W6, sir, 100 into 2 would have been gone out. Look here, 100 into 2. Again 60 is there, no? So, inga pathingana, out of 100, 60 gone out, balance 40 is there. Then one more purchase you made, 100 into 2. So, if it is FIFO, this 40 will go out. And from this 100, sir, remaining balance will go out. For W number 2, 40 plus 20, 60 will go out. The last in, first out means it won't go from the first purchases. It will go from the latest purchases. 2 rupees, it will go first. First is 60. Look at your issue will be 60 into 2, 120. Then this 100 into 1 will be untouched. That's what 100 into 1. And out of this 100, if 60 gone means balance 40 will be there. 40 into 2, 80 will be the balance. Now again 60 has to be issued. Sir, if it is LIFO, for that 60, this 40 will be vanished. Okay. From this 100 balance 20 we will take. So that's what 100 la 20 the remaining 80 will be there at the rate of 1. That's what they are showing. This, if the same is with regard to weighted average, I will not see the lot, man. Sir, I will not see the lot. 100 into 100. Then 100 plus 100, it will become 200. 100 plus 200 become 300. 300 divided by 200 means 1.5 will be the rate. Then 60 will be issued at 1.5. The second slot of 60 will also be issued at 1.5. This is what my statement of FIFO, LIFO and weighted average. Look at here, man. Sir, you have to write a note like this and analyze in which situation, which method to be followed. That's it with regard to the material, sir, revision. I believe that this revision of last 1 hour 20 minutes is feeling comfortable for you with regard to the material. All the concepts, including the questions for your examination, has been revised for you. Comfortable, sir? I just want to hear from everyone that are you feeling comfortable with regard to the material? If yes, we are having one more small topic to be discussed called as employee cost, which is labor. If you are okay, we will be doing with labor, sir, like labor turnover ratios and computation of profit foregone, an expected question for exam. Then we'll be talking about Halsey and Rowan, how to deal with Halsey and various schemes of wage payment. We will be talking about that one question. And treatment of overtime premium and idle time premium, one question. This much is only there. All right. So we'll take a 5 to 10 minutes of break and we will come back once again, my dear lovable students, after 5 to 10 minutes of time, and we will be doing with the labor part.